Hey, welcome back. I'm in one of my outdoor videos, as you can see, and today's topic is on the quantum computing threat to Bitcoin has re-emerged in 2025, which is driven predominantly by the Google's unveiling of its Willow chip and BlackRock's recent acknowledgement of the potential risk in its ETF filings. Now, just to give you a little bit of a context as to the original announcement of this unveiling of the Google's Willow chip and why at that time it was downplayed as an imminent threat to Bitcoin security. Well, in December 2024, if you cast your minds back, then Google introduced, as I said, this Willow chip, which is a quantum processor boasting 105 qubits. While this represents a significant advancement, it's still far from the estimated 1,500 to 3,000 fault-tolerant logical qubits actually required to compromise the Bitcoin's cryptographic foundation, such as the SHA-256 and the ECDSA. Bitcoin's cryptographic design still remains robust against current quantum capabilities. However, the development of Willow has reignited discussions about future vulnerabilities, especially concerning early Bitcoin addresses using the pay-to-public key P2PK formats, which are more susceptible to quantum attacks. Now, this is the actual context and the issue at the time. As I said, is actually be downplayed as a non-threat at that time. But it still raises the question, what is the Bitcoin developer community doing? What are their thoughts or ideas as to how they can possibly counter this imminent threat, even though it's been reignited by the likes of BlackRock, which is the world's largest asset manager. Now, just to give you some ideas as to what they are considering as possible countermeasures to that threat. The first of which is to do with this transition to more quantum-resistant algorithms. Now, in this regard, there are discussions underway about implementing cryptographic schemes like lattice-based or hash-based signatures, which are believed to be more resistant to quantum attacks. These are underpinned by one-way functions. One-way functions are easy to compute, but actually difficult and extremely hard to reverse. Now, this makes it actually ideal for quantum-resistant cryptographic solution, and I think this is the emphasis of the Bitcoin developer community that are working under the covers on that type of solution, cryptographic solution. The next measures are around considering soft forks for seamless upgrades. Proposals actually suggest using soft forks to introduce quantum resistant features without actually disrupting the underlying existing Bitcoin network. And also the third possibility is looking at addressing vulnerable wallets. There's a focus going on in migrating funds from older, more vulnerable addresses like P2PK to newer, more secure formats to mitigate potential risks. While these measures are proactive, the decentralized nature of the Bitcoin network means that widespread adoption of such changes requires consensus across the global community, which can be time-consuming. Now, you might be thinking, these are all good and well and wonderful ideas, but when can we start to see some results? When can we anticipate for these quantum-resistant algorithms or solutions to actually materialize? Well, experts suggest that a quantum computer capable of breaking Bitcoin's encryption is at least a decade away. However, the rapid pace of technological advancement means that the crypto community must remain highly vigilant and proactive in implementing quantum-resistant measures. This makes sense because it's not a day and night sort of venture where anyone can just come up with a solution and then you roll it out as an upgrade to the Bitcoin network. It has to be well thought out, it has to be well tested, and it has to be rolled out in a risk-based manner. It's not something you can just apply like a big bang approach and then the job is done. No. And even more so, given that is the largest crypto blockchain in terms of monetary wealth. If you remember, the entirety of the crypto blockchain total value locked, which is the equivalent of market capitalization in fiat terms, is $3 trillion. Bitcoin alone occupies $2.2 trillion, and it's growing quite substantially over time. At least that is the expectation by many experts, including myself as a Bitcoin investor and holder myself. And also, it's not just the fact that it's growing in monetary value, there's also a huge roadmap of additional applications additional use cases to further enrich the Bitcoin ecosystem. So I've made several videos explaining about the layered model of Bitcoin. There's layer 1, layer 2, layer 3, and even layer 4 type applications that are being sprouted out. And also a lot of fintech players getting involved in order to implement those layered applications. And also you got institutional adoption, so we're seeing more publicly registered companies, private companies adopting the Bitcoin standard, so converting some of its fiat or treasury bonds into Bitcoin in their corporate treasury reserves, headed by Michael Saylor's strategy company. There's also increased level of adoption in terms of sovereign nation states parting some of its wealth into Bitcoin. You got the US made the famous declaration from Trump when he signed the executive order enacting the adoption of strategic Bitcoin reserve asset at the national federal level. And also there is increased appetite from the normal retailers, investors such as you and I, who are investing more into the asset class, because we are seeing it more as a store of value rather than as a medium of exchange in order to preserve your wealth and to grow it into the long term. So in summary, I'm not at all concerned about this threat of quantum computing on Bitcoin security, for the reason I just mentioned, and even more so because of the $2.2 trillion that is locked in the network itself, because that actually drives the incentives in terms of drawing in more capital, more talent to work more on the network itself to make it stronger and more resistant to any type of threat, let alone quantum computing, because it could be something else around the corner, right? And it's true to say that even though it is highly targeted, like I said, the incentive structures still remain in that though everything will be drawn into that network to improve it, to safeguard it against any type of threat or risk. So on that basis, I'm not at all concerned. So if you enjoyed today's episode, please don't forget to hit the like button, to share the video to other colleagues and friends, and if you haven't done so already, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.